Hello fellow traders, Marv Eisen here from Tailor Trading Academy, and I want to start off this video with a quick tip about contract rollovers. On Monday, March 16th, we have the contract rollover, the futures contracts roll over from the March contract to the June contract. Now, contract dates are maybe an anachronism because contracts used to be based on actual delivery of product, and so for equity markets, it really doesn't make a lot of sense, but nevertheless, the system has been carried through, has been maintained, so there are 4 contract rollover dates throughout the year. There's March, June, September, and December. Contracts are designated by letters, and the March contract is the letter H, the June contract is the letter M, the September contract is the letter U, and the December contract is the letter Z. And so here I have the CME Group rollover date chart set up, and as you can see, 2026 right over here, follow my cursor, and right over here, 3/16 is the rollover date. The actual contract expiration date is March 20th, but nevertheless, the rollover date starts to change in terms of price from the March contract to the June contract. I'm going to show you what that means. As far as the letter designations, you can look that up on the CME website as well. Contract month codes, January through December actually, and the only 4 that you need to be knowledgeable of is the March H, the June M, the September U, and the December Z. All right? So as of Friday the 13th, March 13th, we were trading the March contract. And on Monday, March 16th, the June contract starts. And so how do you trade that? Is it just a simple rollover? Well, not really. Let me show you my chart. And here you see my watch list set up, and I want to call your attention to the first 3 symbols. ESH, that's the March contract, and then I have ES1, and then I have ESM. Okay, so I've been tracking ESH, the March contract, 2026. And right below that, I have something called ES1. Now, this is a continuous contract, and I'm going to show you why this is important. And here's why I'm pointing this out. If you'll notice the prices, the ESH, the March contract, and the ES1, the continuous contract, are the same price, $66.36, all right? $66.36. And the ESM contract, June contract, is $66.85.75. So $66.36 for the March contract, $66.85 for the June contract. There's a difference, right? And on Monday, March 16th, we're going to be trading the rollover. And so what's going to happen on March 16th, the ES1, the continuous contract, which has been tracking the March contract in price, it's going to start reflecting the M, the June contract. So beginning on Monday, June 16th, we're going to be tracking the June contract due to the rollover. And when I say track, I'm talking about setting up our chart with the Tailor Trading Zone, because the Tailor Trading Zone is based on entering the open, high, low, and closing prices. And so are we going to be entering the March contract, open, high, low, and close, or the June contract? Well, there's going to be a radical difference. So what I'm going to suggest to you, beginning on Monday, March 16th, track the ES1 continuous contract. That's the S&P Futures continuous contract. And so if you've been tracking the ESH, you can track the ES1 or the ESM beginning Monday, June 16th. So that's a little bit of dialogue about the contract rollovers and the letter designations for the months. Now, as most of you know who've seen my videos, you know that I trade using the Tailor Trading calculator, entering the Tailor Trading Zone on my chart each day. And here you see it on Friday, March 13th, with the trading zone at support 66.63, resistance at 67.26, and the market, I'm going to show you the action as the market opened up at just about 9 o'clock, just a half an hour prior to the market open. And as prices were coming into the day, prices were about in the middle, a little upper to the upper portion of the Tailor Trading Zone. So are they going to go up? They're going to go down. But as I always say, wait for about a half an hour to an hour after the market opens to see what's going to happen. Because when you consider a candle, okay? There's a high and there's a low. There's a shadow at the bottom, shadow at the top. And so what usually happens when the market opens, there's volatility, whether it's the top or bottom of the candle. And then as the day progresses, prices move through the body of the candle. And as prices close or come to the end of the day's candle, be it the top or the bottom, there's also some volatility. But ultimately, a candle is going to be revealed. And so that candle, we're waiting to see which way prices are going to go. Are they going to go up or are they going to go down? And I like the Tailor Trading Zone because it just gives me a visual representation of where prices are likely to go. And so on Friday, March 13th, and here we see prices were trading toward the top of the Tailor Trading Zone for the first 15 or so minutes of the day. Actually, not even in the first 15 minutes, it's about 10 minutes into the day. And as I've said, wait for a half an hour to an hour to see what prices are really going to do, because there's going to be that morning volatility. And so here we go. I'm going to give you a little more information as prices move on. Now, as we can see, and I'm going to stop it here, prices hit the top of the Tailor Trading Zone, basically went through it a little bit, but then started to come down, and with an oversold stochastic. So are prices going to go up based on the stochastic? Well, the stochastic is a good indicator, but it's a confirmation of price. So we're going to see what happens. So would I trade to the downside with an overbought stochastic? Well, I'm more favoring the Tailor Trading Zone for information. So here I'm not really sure whether or not the market is going to go up or down. And it's only about, let's see, at this point it's 10 o'clock. Let's move further into the day. And I'm going to give you some evaluation of how I think of the market. Now, here we go. Prices are well down into the Tailor Trading Zone toward the previous day's close at 66.75. Are they going to go to the previous day's close? Well, prices are oversold, starting to turn around, and then the market is making a little kick upward. It's 10.18. Right now it's 10.18. And where are prices going? Well, let's wait a bit, because now we're going to see what's really going to happen. And I'm going to stop it right over here. Do you see this two candle setup? And I've made this point in previous videos. When you see two candles forming that are much longer than the candles immediately preceding them, where one candle is in one direction, the other candle is in the other direction, the market is almost always going to go in the direction of the other candle, which is the red candle here. So this is the signal, and stochastics is almost overbought. This is the signal the market is going to trade to the downside. And so here is where you get on. This is where you get on, because could have gone down to close the gap. That would have been too easy. Wait a bit. Have some patience. And so right now it's 10:30. 10:30, that's the time to get on and look to see where prices are going to go. Okay, we'll stop it right over here. Prices went down through and hit the previous day's close, closed the gap, bounced off the trading zone support. This was the trade from right around here, from 6,700 to 66.62, about a 40 point trade. Not too shabby. This was the key, and we used the stochastics as a bit of a confirmation, and we use the trading zone as a visual representation of how to trade. Now, 40 points. Now, let me make a distinction between big picture trading, which is what the Tailor Trading Zone is going to help you do, and scalping. Scalping is typically a couple of points, get in, get out, make multiple trades through the day, incur a lot of brokerage commission, and maybe break even, maybe make some money, maybe lose some money. But compared to big picture trading, you can pick up, as I've just demonstrated in this video, you can pick up 20, 30, 40 points more using the trading zone, using the 6 trade setups. And one of them is this setup right over here. This is a candlestick setup. The 6 setups are GSTTFC, gap, support and resistance, trend, time and price, momentum, and candlestick. Candlesticks setup signals are one of the 6 trade setups. And here you see the setup right over here. Very visible and very easy to read. And we can see right down the Tailor Trading Zone gives us the guide of where prices are more likely to go, which in fact they did go. And there we have it. Big picture trade setup. So again, the Tailor Trading Zone, and using the 6 trade setups, you'll be able to take advantage of big picture trading. So if you're just getting started in trading, or you've had some bad experiences, trade the micros. It's only $5 a point. Can't get hurt too badly if you make a mistake. The important thing is make sure, or try to make sure as much as possible, that you make a good entry. A good entry is the key to making good, wholesome trades that are going to make you money. So that's it as far as this particular example goes. And by the way, when I track markets, I don't just track the ES. I don't use the Tailor Trading Zone just to track the ES. I use the Tailor Trading Zone for multiple markets. And I track the ES, and here's my Tailor calculator, the NQ, the YM, and the Nifty 50. I have a number of people from Asia who watch my videos. Nifty 50 is one of the major markets traded in Asia, India, Australia, Hong Kong, and the Tailor Trading calculator works very well with the Nifty 50 as well. I'm going to give you an example of what I'm talking about. Here's the Nifty 50. I have it in my watch list, and here's the Nifty 50 on Friday, March 13th. The prices started right over here at the top of the trading zone, traded down through the trading zone. Again, works for the Nifty 50, works for ES, works for NQ, works for most equity markets. For futures, works very well. So to recap, on Monday, March 16th, we're going to be trading the ESM contract, the June contract. That's the ESM, or if you want to track the ES1, the ES1 and the ESM are going to be trading the same price, and they're going to be different than the ESH. The ESH is going to be left in the dust, and we're going to be tracking the ESM or the ES1, whichever one you want. The price is going to be absolutely the same. Big picture trading versus scalping. Well, the Tailor Trading Zone is going to help you with big picture trading, not so much with scalping. And most people who start trading trade with smaller accounts. They have to get their feet wet. They're going to watch my videos. They're going to watch other people's videos. There are a lot of good trading videos out there. I wouldn't recommend that you just pick up a brokerage account and start trading right away. Do your paper trading. Track whatever market you want. I only recommend tracking one market at a time. If you're trading ES futures, great. ES futures or ES micro futures would be perfect. If you're tracking Dow or NQ, the Tailor Trading Zone is going to work for those markets as well. So that's my video for today. Thanks so much for watching. Trade safely. If you'd like some more information, you can get it at my site at timelessdollar.com. I have several trading courses. One is absolutely free, how to avoid costly trading mistakes. You can get more information on the Tailor Trading calculator. Click this link up here, and that's timelessdollar.com. Again, thanks for watching. I'm Marv Eisen from Timeless Dollar Trading Academy.